If you look at the way things have shaped up, it's maybe no surprise defense has been on an upward move. Do we think as though the current prices reflect the geopolitical state of uncertainty? We just had Syria developing really over the last few days. Do we think defense is still a place to invest?
Tom, good morning and good to see you. And absolutely, the weekend's news from the Middle East is a good reminder of the multipolar and dynamic geopolitical landscape that we're operating in right now. And the catalysts that have driven defense stocks in 2024 continue to get stronger. Major militarized nations are spending heavily on military expenditures across the board, and that is driving fundamental growth for many of these defense stocks. But the piece that we're focused on is the digital transformation of defense, which is just getting started and is at an inflection point. We've seen that outperformance from stocks like Palantir so far this year, but we think that the story is much broader than that. And many of these traditional defense companies will likely start to participate in that going forward.
Okay, Palantir is one of the main drivers of this whole trade right now. It's not a traditional name. How then do investors kind of go at this? Do they take this ETF basket approach to it and just kind of ride an index higher? Or do they have to look at some of the alpha or outperformance in some of these newer plays on defense as opposed to the legacy names that we've all known?
Absolutely. Look, Palantir is incredibly unique in the sense that they have been able to carve out this market dominant position when it comes to the integration of software, when it comes to the integration of AI into the markets. But that trade has already played out. We encourage investors to take a more diversified approach going forward. When you talk about the digitization of defense, there is a lot more to that story beyond just software. There is a unique interplay between hardware-focused defense systems and software. And a lot of the traditional defense companies, the Lockheeds, the Raytheons, are integrating AI, are integrating technology in the back end there when it comes to these advanced weapon systems as well. And they're currently trading at typical industrials level valuations, which really presents an opportunity. So our advice to investors is to take a diversified approach and play the macro story, play the digitization of defense story, and avoid over-concentration in specific names.
And one other point, Tejas, before we let you go, there have been pockets of extreme outperformance globally for defense contractors, not just the U.S. ones here. Many of these ones we know because we see them in U.S. indices. But you look at some of the European names out there, perhaps like Rheinmetall and others. Is there a play between, say, European and U.S. defense stocks as well?
Absolutely. The defense expenditures story, like you said, Dom, is a global one. Global military expenditures will grow for the 10th consecutive year in 2024, and we project a 4 to 5% growth, especially when you look at Europe. There is significant underinvestment that Europe is making, and the European defense contractors are in a very good position to capitalize on that trend. So this is a very global story, and technology continues to see an incremental share of that spending that is coming online.